People overlook this. People overlook the risk to reward for Ethereum. If I was to show you a random chart and you simply just look at this curve, and I tell you this is a range-bound chart because it shows the fraction of something in a broader context, what do you think? There is more upside potential or more downside? It's a rhetorical question, of course. There is more downside. This is the Ethereum dominance. How big is Ethereum as part of all of crypto? And Ethereum did have its nice rally, right? Especially after Bitcoin went from 3K, roughly a bit over 3K, to 40K. The crypto crowd was looking for something a bit more risky. And so capital shifted from Bitcoin to Ethereum and then also partially to the altcoins. Then came a lot of technical development on the Ethereum side, change to proof of stake, implementation of the burning mechanism. And so this helped Ethereum rally quite a bit. But we are stuck somewhere now, right? Since 2 years, we are stuck in this sidewards trading range. Ethereum cannot really gain anything more, relatively speaking, to the rest of crypto. And this cannot only be seen in the price. We also see this in the total value locked chart. So the usage of Ethereum in the DeFi ecosystem. What we have over here in blue is how much of all of DeFi is currently used by Ethereum. So Ethereum has competition. There are more blockchains than just Ethereum, more smart contract platforms. A lot of them simply just copy Ethereum, so they are EVM compatible. You can deploy the code that you use on the Ethereum blockchain on a cheaper blockchain with lower gas fees, with lower transaction costs. And so this brings Ethereum to have quite a hard time and not to gain anymore, relatively speaking, right? So in terms of relative market share, it's not growing. And that's also for roughly 1 year. Before that, it was even losing against the competition because there's more and more, right? There are more and more blockchains that take away what once was mainly just ETH. I don't have a crystal ball. I cannot say where the Ethereum US dollar valuation is going. I simply just look in terms of probabilities, in terms of what's the upside versus the downside. Ethereum has already run quite a bit. And there's no real indication why there suddenly should be an outperformance. Let's look at something that's even more impressive. So this is the total value lock chart of Ethereum in US dollars. And this crashed, of course, because there was a crypto winter. But now we see Bitcoin is going up quite a bit, right? It went up 80% year to date. Ethereum's total value locked is not going up by 80% year to date. Now this is the US dollar chart. What about the chart measured in ETH? Because the Ethereum price went down. Even measured in ETH, the total value locked is going down. Isn't that interesting, right? You would expect that, okay, maybe there are no new entrants into the space. So of course, US dollar valuations can temporarily drop. But when there's more adoption, when at least measured in ETH, the activity is increasing. And it's just a matter of time until we turn around. But that's not the case for Ethereum. Even measured in ETH tokens, the total value locked on the Ethereum chain is going down. More and more capital is moving to other chains, to chains with cheaper gas fees, to chains like Arbitrum. Right here, the total value lock development looks better. Or to chains like Optimism, same thing. Rather tends to rise, despite, of course, a lot of volatility. Bitcoin, on the other hand, looks very, very healthy, right? Year to date, the price went up by 85% now even. The number of wallets that hold at least one Bitcoin continuously increases very steadily. We are now above 1 million wallets that hold at least one Bitcoin. So more and more adoption. And even in the medium to short term, we are now above the best backtested moving averages for Bitcoin. So if that's a new concept to you, right, the idea is we want to buy whenever the price is above a moving average. We want to sell whenever the price is below. So we try to time the market to a degree, and then we try to find out what's actually the best moving average to take. We don't just want to take the 100 or the 200 day. We try to determine what's the best. And for that, we can do simulations of buying and selling. And I've done simulations for Bitcoin all the way from just looking at yesterday's price, so the 1-day SMA, down to the 200-day simple moving average. And when you simulate this buying and selling, right, whenever we cross above or below, when you simulate this trading and you check how did it work for the 50-day, how did it work for the 100-day, how did it work for the 150-day simple moving average, what was historically the best for Bitcoin? When you do that simulation, you find out that the 124-day simple moving average outperformed massively historically. Here, this is the price of Bitcoin in white, and this is the back-tested performance using the 124-day simple moving average. This is a linear scale here, right? We can also look at this on a logarithmic scale. And here we can really see how constantly this outperforms, right? Logarithmic scale means we are 10x from one of those horizontal lines. So we're 10xing whenever we cross one of those horizontals. So very nice, right? This starts in 2018. So we have a bit of the bear market of 2018 here as well. Then the move from 3K to 69K, and then the turnaround again after the Terra Luna and the FTX collapse. And from that perspective, Bitcoin looks very positive. We are above both moving averages. We should be expecting rather to rise than to fall. The approach isn't perfect, right? We do have our fake outs where we sometimes buy high and sell low. But that's why we do the back tests. We try to find out what's the best. We've got two moving averages here, right? We've got the SMA, the simple moving average, in turquoise, and we've got the EMA, the exponential moving average, in red. The SMA works a bit better. The EMA still works, right? So this is the exponential moving average, but it tends not to be as good, right? So this is a summary of all of those back tests. So 124, that's over here. The 124-day simple moving average has the best annualized return. The exponential moving averages tend to not perform as well. They still do better than buying and holding, which is here in black. So a huge outperformance. It almost doesn't matter that much what moving average you take, but 124 definitely takes the win. So to get a cleaner picture, we can also simply just remove the EMA. We would be buying in over here. We would be selling over here or betting on falling prices. We buy back in here again, we sell here, etc. Right? And currently we should be long. It's a bit more of an active approach to investing in Bitcoin. You could also simply just buy and hold it for 3, 4, 5 years. The tokenomics, the very low inflation of Bitcoin versus fiat will take care of the gains over the long term. But if you're not that keen to lose 70, 80% temporarily measured in Bitcoin, then you can of course use backtested approaches like this. Now this is one of many backtests I've done over the years. Backtests on different trading approaches, backtests on different assets. And that's, I think, what makes this channel different from others. We only use approaches that historically worked well. And even though past performance is no guarantee for future performance, I think it's the next best thing that we have. We simply work with the assumption that psychology doesn't change too much over time. When people are down 80%, they're likely going to react very similar, no matter if this was in 2016 or in 2019 or in 2022. If an altcoin suddenly has a spike in attention, does it make sense to buy? And if yes, under what circumstances? Those kinds of structures don't necessarily change with time. And so we've done all kinds of backtests, and you can download all of those Excel sheets for the different backtests in the premium membership. There are also tutorials specifically for backtesting. How to build such a sheet, how to change such a sheet. All of this is very valuable content, and it is a proven approach that helps to ride those positive waves whenever we are in a bull market, and that helps to protect us whenever we are crashing down. Now there's more information around the premium membership at thebitcoinstrader.com, a dedicated video on this. And the price isn't that cheap. It's $75 per month. But here's the deal. If you are not happy with the content, if you're not happy with the support in the Telegram channels, if you don't think that you get enough alpha out of this content, then simply message me in the very first week and I'll refund you 100%. So there's zero risk for you. Most people that sign up, they stay signed up because they get more money out of it than they spend. But feel free to simply just try it out yourself. You can watch all the videos, you can download all the Excel sheets. The reason why most people stay subscribed is because of the community. It's It's because the trading opportunities we share with one another, and it's those opportunities and the timing of those opportunities that make us win over the long run. So check it out. It's thebitcoinstrategy.com. 100% risk-free for you. I don't know a reason why you wouldn't try it out.